Hey, good morning. Whew. I'll tell you what, running two businesses full time by yourself, that's I'm not usually one to complain, but I'm getting exhausted. I was out till almost 8:30 last night in the dark, uh, getting houses and stuff marked out for the engineering business, uh, and doing survey work. And tell you, it wears you out to do another full time job after you finish a full time job. And whew, anyway, uh, hey everybody, hey Terry, good morning. And how about that Disney? How about that Disney? Man, I tell you what, that was pretty sweet right there. I didn't trade it, but it went right up through both my upside targets and through the resistance, the upside resistance. Pretty amazing. You know, we look at this pop right here, pre-market. I mean, post-market and pre-market. Look at it, keep on running. That's we're up to 107.20. I mean, look at that. We could be heading on up. Heading on up. That was the resistance for that prior high. That breaking that out. I was kind of expecting a retrace, but hey, guess we did it down here and didn't need all that. So looks pretty good. Could be turning the tides for Disney. Finally got out of the funk. Came up just shy of the downside target. Not too bad. Hit that target. Came up shy of that target. And up and away. So right now, upside target for this move, probably, well, heck, we could be heading right up in here. Right up in that zone right there. Might do it fast based on how fast it's coming up. That would put us right in line with this. Pull this down right there. Pull this over right here. And might be heading right there. Not too bad. That's pretty amazing, really, that move. So anyway, hey everybody, good morning. Got the watermelon monster here. It's a little bit see-through because it's got green, all like green on the can in front of a green screen. And welcome. If you want to chat on the live stream and say hey, like all these wonderful people. Hey Kay, I don't recognize your name, but morning. And talk to all my awesome subscribers. Click the subscribe button right down here and be a subscriber on the channel. A few seconds later, you can chat with everybody. While you're at it, you might as well hit the button down below with the bell. Get all the alerts. And then if anything I say is beneficial, helpful, hit the like button. I threw in the chat there the prediction replay from yesterday. And if you missed that, it was a webinar we did on Zoom, not on YouTube, where I threw out a bunch of predictions for this year and some tickers that I think are going to be positive this year and beyond. Probably some of them have years worth of upside potential going. Long-term, big duration upside plays. So if you missed all that, the link's up there in the chat just above me. So, all right, just figured out a chat. Well, congratulations. Welcome to the deal. So, it looks like we got Darren, Terry, my sister-in-law Terry's here, Nikki, Philip, Infinity, Andreas, Lisa, Rim, Lisa, Pat, Jaquise, Ryan, Terrence, Peter, and up above we had David, Everett, Maurizio, Larry, Arturo, Jorge, Donald, Kevin, Mark, Cliff, Robert. Welcome, everybody. Giovanni, Nikki, glad to have you as always. And yeah, so I've been kind of on the doom and gloom this week, and I don't like being doom and gloom. You know, I'm throwing out. A couple people have had a little bit of heartburn with it, and like not the doom and gloom, but the what I've kind of found. Now look, this is like a threat down the road, and if you missed it, go check out yesterday and the day before, like almost all week. I've been talking about this. We've got like this $10 trillion thing sitting out here that the Fed is going to have to refinance debt. I mean, they've got about $8.9 trillion, trillion with a trillion dollars in debt. I was trying to pull it up, like the graph I had, trying to find out where I put it. I might have closed it like a dum-dum. Everything's rearranged. I don't know what happened with it. Didn't install updates, but everything's rearranged. I just love it when that happens. And anyway, we got like 8.9 trillion with a T worth of treasury debt coming due. Like it has to be paid off this year. So what do we have to do when we're running a budget deficit is write more debt to pay off that debt that comes due. Now, we're running a $1.4 trillion deficit too. So you add like 8.9 trillion plus 1.4 trillion, that's $10 trillion. Over $10 trillion worth of debt that we have to refinance or finance, finance/refinance. And I've been talking about this all week. And yesterday, or I guess when I was doing research for yesterday, I found a report from the Treasury. It's on the Treasury's website that they're actually encouraging using leverage to borrow, to lend to the Treasury. I mean, I just can't fathom this. It's between they're finding people are using between 20 and 56 times leverage. 56 times. That means if you had $100 in your account, you could potentially lend the government $5,600 on your $100. I don't know where you get that kind of leverage, but that's pretty wild if you ask me. So yeah, it's cascade. Yeah, that's right. It's cascading, and it's a house of cards. Is really what I see it as. So anyway, been talking about that all week, and I'm just kind of like, a few people have gotten hung up on that and how bad that is. So it's not the bond. They aren't bonds. They're well, I mean, Treasury bonds, but it's bills and coupons, and at some point it's going to come apart. Like, especially since the SEC is going to crack down and cause these, just like they did with the mortgage-backed securities, for people that have over, the SEC is saying like a small amount, like $20 billion, when we're talking about $10 trillion. They're talking about requiring new rules that were proposed by the SEC. Were requiring anybody that has $20 billion worth of this leverage put on in treasuries has to register as a broker dealer, and that's not. Then what happens is you fall under more regulatory scrutiny, and you have a lot more reporting that you have to do to the SEC. So anyway, it's a basis trade is what it is. You make the money off the basis spread, and you can make it going up and down. So if treasuries come down in pay, you can make money. If you go up in money, you can make money. It's a little bit different thing than the banks holding the treasuries as collateral. You have to read the report to really understand it. And maybe if you read the report, you don't understand it. It's kind of some nerdy stuff, and high finance. It's almost like take the mortgage-backed security thing and copy it over to treasuries, and it's the exact same freaking thing that they were doing. And all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because the mortgage-backed security thing blew it out doesn't mean that the treasury thing is going to blow it out. I think this might be the straw, though. And this presentation is intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell any financial instrument. So if you desire personal financial advice, you need to hire and consult a financial advisor. Now, we're about to the end of the week here. We're about to the end of the week. It totally is a copy. I mean, it really is. Like, they just substituted, instead of mortgage-backed securities, they went to treasuries. and you know, the government's cool with us borrowing treasuries. All right, or you know, doing treasuries. Let's do treasuries. And I don't know. I don't know. We'll see what happens. It's likely to blow things out, but it doesn't have to blow things out. Now, this is the thing. Um, people are people were watching my prediction thing, and then they're like, "Well, JT, you're predicting we go higher, but you know, on YouTube, you've been saying all this stuff that's so super negative." So it's all about time frame too. We're probably going higher in the short term, and we may pull back in the immediate term, or we may pull back in the longer term. I don't know. Like, it's being irrational here. Like, the market is being irrational. Look, we haven't had any kind of 3% pullback in a while. We're getting stretched here. 103 days. We haven't had any kind of 3% pullback. All right, we're already getting into the top 90%. Now, something else I was going to talk about. I was actually going to save this for tomorrow, since it won't happen till the close tomorrow. But if we close the week green on the S&P on the weekly chart, coming back over here, popping up on the weekly, zoom this back up. Look at this right here. Look how many green candles this is. There's one red one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks. 14 of them are green. The last time we did that was 1970, something like that. And I'll share some more of the details tomorrow. But this is a rare event right here. And we're about to get even more rare. We're actually doing something that it's legal to do the borrowing. Like, it's completely legal right now until they make it not legal. But I'm going to share some details tomorrow. We have a setup we haven't done since 1929. 1929. Anybody remember what happened in 1929? I mean, I don't think many of us were alive back then. There might be a couple, but some crazy stuff happening. Nvidia about to hit my target here. Market opens just a minute, and craziness. We're in a very unique time right now. This is very stretched, very unique. Why are we this bullish? 1929 was the year Goose was born. I don't think he's that old. Come on. He's still flying planes. If he was that old, they wouldn't let him fly for American. Anyway, so we haven't done this since the 70s. There's a downside coming. 30 bonds don't really affect the stock market. They do and they don't. We've got there's the market. Heard it dinging. Chart come alive. Getting a little bit of pullback. Bitcoin though, look at this baby. Look at this baby go. Look at her. She's trying to break back into that channel really hard. Really, really hard. Oh, STLA. Wrongimer. We hit the upside we were talking about. These guys are sitting on a year's worth of cars. Or at least they were. That starts coming back down. We may go back down. I gotta put some more alerts on here. Sorry. Anyway, yeah. So there's Aaron. 1929 stock market crash leading to the Great Depression. What has JT been talking about? Anybody that's been with me a little while What have I been saying we might be on the brink of? And let me know in the chat if anybody remembers, anybody knows. And they're not scared at all. Like, this is it's like a casino, man. If you can keep printing money, they don't care. They don't, like, the party keeps going. It's a different world in the land of those big fund managers and stuff like that, especially the ones that trade leverage. Whole different world. So, whole different world. And yeah, my DGS2 chart. I mean, look at that, getting all sorts of extra stuff popping up. My DGS2 chart, we're actually getting a tick up in the interest rate, just kind of chopping. So this is the line in the sand down here, the danger zone, if you will. Highway to the danger zone. That's the Fed funds rate. If you wanted to recreate this chart, DGS2, Delta Golf Sierra 2, right there, the number 2, and you click the compare button right up here, and you type in FED FUNDS, one word right there. Add it to the chart. That's the orange line right here, Fed funds right there, and that's the chart. And it shows up on a weekly. You can't really do it tighter than that. And you know what? Every financial crisis we've had before, where the stock market tends to plunge, at least in my trading history, every time, like, this is just one of those things, like, I've learned, like, touch the hot stove, oh, touch the hot stove, ah, touch the hot stove, ah. What do you think's going to happen when you touch the hot stove? We can see it right here. Not trying to be doom and gloom, because we can keep being irrational, all right? But this thing's coming down again. And it's probably going to lead to some kind of stock market crash, freak out, whatever you want to call it. It's probably going to happen. Probably going to happen. S555. This is part of the problem too. Look at this thing. As we keep making all-time highs, the breadth, and this is part of the major problem that's happening right here. The breadth of stocks, the number of stocks going up, keeps declining. That's what they call market internals. All right. That's when you hear the term market internals are looking bad, that's why they're looking bad. This thing is dropping out while we keep grinding new highs on the S&P 500. That's the setup for a crash. It can be wicked too. Like, AI is not going to save us. You know, NVIDIA is not going to save us. Big tech's not going to save us. Like, when the final little squeak happens, it's going to be, I can already, like, I've learned this lesson. If you haven't been trading through these other events, if you weren't here and you weren't here and you weren't here, this was a rates freak out right here. That was the housing crash. I watched how, oh man, that was wicked too. Watching 600-point swing days on the Dow, which back then was uncommon. Watching 100-point, we'd just be 100-point swings on the S&P, just like it's nothing. And back here, that was devastating when I first started trading. I mean, but allowed me to pick up some pieces down here. And my longest trade ever started right in there in 2001, I think it was, and lasted all the way till 2018, 19 over here. Set up the base for my family. And so, I mean, right place, right time. And yeah, Beto's moving up, of course, because Bitcoin's rocking. Bitcoin is rocking it. And Bitcoin might be rocking it partly as a credit default swap for fiat. That's a different conversation I've had in the past. So anyway, ES hanging out at the top, probably going to extend. Short term, we have an upside target right up here. Way on up here. Like 51.50. It's like 70% likely we're going to pop on up there. Another 100, 150 points. Pop up in that zone. In Q. At this point, probably likely we're going on up. And if we look at the bigger pullback we did, that upside target from that high to that low, right around 18.4. Probably going to head right on up there. Russell is looking a bit more bearish, though. This one is not pushing all-time highs. This may be where the giant opportunity lies. If banking has a big problem, I mean, the New York NYCB, it's kind of funny. A year later, this problem's rearing up again. We may see this extend way on down. It could go significantly down. Those smaller regional banks, all in here. This thing not making new highs, not even doing anything slightly bullish. We haven't flushed it out either, so the game on in the correction. Now that could have been the high. We could be starting down. So there's caution. Like the indicator lights just keep flashing caution. So I'm trying not to be doom and gloom, but you know, there's lots of reasons to have caution. Now, the one thing that can completely wreck the Fed's plans for trying to cut rates in the future is this baby right here, oil. We did measured bounce right there. 3 green days in a row. We break back above the roadmap line, and it's game on for going higher. Next target up, you know, this 83 to 90 area. Then we'll probably get another pullback, and then we can go much bigger levels, you know, potentially up in here, like 113, 123. And there's some even bigger targets, 150, 170, possibly even ridiculous 250 targets. But one thing at a time. We're in the zone we're in right now. Roadmap line is above us. And we're kind of set up a little bit bearish right now. So this was choppy and overlapping with a 3-wave up and a retrace. And if we hold here and turn down, we may go lower. So we got to wait. There's no high probability setup at the moment. And I kind of drew this target zone. If we zoom this back up, I drew this target as like a retrace zone that I thought we would come hit and then potentially turn down. So we need to, if we get substantially above it and above this prior high here, then things are looking a little different. But if we turn down here, maybe in for that dropout to find that low in oil. GC, gold. This is gold futures. Looking a little rough still. I still expect us to drop on down. Big picture. Now, we could get a little pop. We could chop in here. Ultimately, I think we're going to drop out in the next couple weeks. Come down here, make a bottom, and then we can start up in gold. Bitcoin, trying its darndest to break back in that channel. Trying. It's interesting. It moved that channel around again. Keeps moving my channel. It's weird. Thank you, TradingView. I appreciate it. I should lock it. I wonder if it'll stay locked or if it'll unlock it. Anyway, we break back in the channel. That's bullish. Ethereum coming back up to this uptrend of the lows. Retested once, retested twice. If we get back above it, that can be bullish for Ethereum. It does have a halving event out here in May. Not having it. Said the wrong thing. Not a halving event. A spot ETF potentially approval. Bitcoin is the one with the halving event out in April. And Bitcoin's got I've talked about this a lot. We've got about 10,478 blocks left, 70 days and counting, and Bitcoin's up to 45,000. Strong stuff. That takes all we have several Bitcoin-based things on the list here today. So, dollar, getting a little churn here, may pop up to that 618 level, that retrace. If we can get above it, we're probably tipping the odds to going higher back to 109. If we bounce off of it, glance down, break below this consolidation zone, we're probably coming on down here into the mid-90s. And that can happen regardless of the way the market moves, because the market's been going higher, if you haven't noticed, and the dollar's been going higher at the same time. So people that say the dollar has to drop for the market to go higher, guess what? That's not true, all right? That's only true when it's true. And right now, I mean, look, the dollar was dropping as the market went higher. Now the dollar is rising as the market keeps going higher. So there you go. Now, what's actually popping and dropping today? We have Disney. Look at that. Beautiful. And the upside target, the bigger upside target now up here around 116. Looks like we may retrace a little bit this back off. We did break through that prior high. And that was, if we retrace, that's where I want to see us hold support and go for that move up there to 116. MPWR, monolithic power. This is not one I look at very often, apparently. We're up to the 1618. No trade. I mean, if you missed it, you missed it. Don't chase it. Could it keep being ridiculous like NVIDIA and SMCI? Sure. But I wouldn't chase this. The downside risk is greater. Look. Holy. Are you kidding me right now? This is stupid. These guys don't even make anything. All they do is license technology. Well, that's ridiculous. I don't know what they earnings. It's not even that big a beat. I don't know. This is dump. Like this is dump money in anything that you think is going to be crazy. MSTR breaking back above that aggressive entry. Beautiful. Next resistance up here with the more conservative entry above 625. Targets 800, 900, possibly even higher. We've seen the last few pullbacks have gotten us to the 2.272. That would be about 1100 right up here. I don't know where all my alerts went on this one. Reset some alerts. I do have long shares. Not many. I just have a few. You know, people say it's too expensive. Well, if you can afford $500, you can buy a share and get a piece of this. If your $500 turns into $800, was it worth it? And it's not really short covering. If you're talking about this one, ARM could be short covering. That's just ridiculous, though. And monolithic power. Hey, don't argue with the charts, but those aren't things to be chasing. I'm just warning. Now, S&PS, this one still has upside. 596, 629. Those would be the upside targets. This 595 area, probably 70% likely. 590. I'd be conservative on your target. Don't get too aggressive. CYBR, look at that. Ridiculous pop. Like, we're seeing so many ridiculous pops. I don't remember a time when ridiculous pops were this prevalent. And there's no pullbacks to it. Yeah, this one pulling back a little bit, but I'm sitting here just like, wow. Just straight up wow. This is a straight up dumpster fire. All the makings. And it's being stupid. This one's probably coming back down again. You're like, but JT, they solved all their problems by reverse splitting. No, they did not. That's just stupid squeeze, and it's probably going to come right back down. RL, More crazy. Holy guacamole. Holy guacamole. It's ridiculous. Money's just getting dumped into anything they think they can pop. EDU upside right here. That prior from this zone where we had a lot of trouble. Several times before we topped out there, all the way back here in 2018. We consolidated there in 2020. We found support there and then plunged through it and back tested it and then went on down in 2021. That'll probably be the zone we're shooting for now when we come back up in there. CFLT. Nice pop, but that's still right in the middle of the consolidation. Nothing to do there. HKIT. So where does JT get this list? I go to stockchameleon.com and get the morning movers, the pre-market movers. Anything moving $2 or more goes on the list. HKIT, another ridiculous pop. That's see what happened last time here. Last time we did this, lower high, plunge. Even if we do anything like similar to that again, probably come back down. Coin, nice little move up, but we're still not. I want to see this drop on down. If we break out above 138, that's interesting. If we break out above 160, I'd consider adding a position. Looking for this move up to 250 to 280. I do think we're going up. I want to see it finish this correction. It may not do it. It may come up just short. That may have been it. That was a resistance zone because of the prior high over here. And we just kind of barely glanced it, which can be very bullish. So CDNS keeps grinding up. Not much to, it's just, we got to get a bigger retrace. That's not enough to excite me and interest me. There you go. Ridiculous up, right back down. That one's probably a giant dumpster fire of crap. Don't trade this stuff. Why do you want to get involved in something that does that? Don't do it. ELF, that one keeps grinding. Next upside target on that one, 200. In fact, I'll put an alert up there just because I'm interested in knowing if it does it. I didn't buy enough time. I got into this back here. My options expired in here. I should have bought options out to here, I guess, because that would have been way profitable. But I didn't. And I lost money on being exactly right to the target. And so JT doesn't get it right all the time. I mean, I got it right, but didn't do the trade right. So time is the hardest part of this whole thing. Oscar Health. Let's see what we got. Right up to ridiculous levels. That's probably going to retrace. Like that's going. So many of these charts exponential. So many charts exponential. Win. Look at that. Breaking above the 618. This starts tipping the odds. We didn't reject. That's the level. This tips the odds. 70% likely that we're going to go right up here. Oh, right here. This is the last line of resistance right here. If we bounce off of that, if we get above that, probably going right up there, 126. Maybe as high as 138. EXPE. Man, stupid level. Like, stupid moves. This one's going to get another extension. Oh, yeah. Got to do the fibs a different way. Wow. Crazy. All right, that's going to extend. And I don't have a great way to... Yeah. Here's the target zone. we can get above that, we're probably going on up. That would be where I would expect it to at least stall. Yeah. All right. MAS. Just, this is a really dangerous time in the market. I cannot stress that enough. Everybody's like, usually this happens over a longer time frame. Right now, it's happening so compressed. Everybody's like, dear gosh, you can practically buy anything that's just popping and make more money. And it's happening in such a compressed time frame. Usually this happens over months, and we get some pullbacks in here. This is happening in such a short period of time. I can't stress how dangerous this is. This is there's your upside, 78.88 on MAS. WRK basically came back to the roadmap line, 44.46 on the upside. This is going to be medical junk. Huh. 20-for-1 split. I would be very careful on anything medical biotech when it has the SEC. I mean, when it has the FDA involved, things get a little crazy. And this looks like it's China, just by the name. I don't know, whatever. I wouldn't mess with it. Things that take two interactive. Look at that baby go. Sitting at resistance on the upside. Downside risk back to the roadmap line. Upside 183. SXTC. No, that's a dumpster fire. Reverse split. I've never seen so many reverse splits as we've had lately. And money's getting expensive. MYLS. And people say, well, why isn't big tech having such problems with money? It's because money is a tool for them. They have money, and people will give them more money, but and not expect even like the returns for giving big tech money can be so great as compared to the treasury returns. But something like biotech gets a little like that, it needs more money, needs more money, needs more money, needs more money before it ever pays off. That's the one that gets to be questionable. And that's also why we see the small caps that have to go to traditional borrowing. That's why they're getting just murderized here. They have to go into traditional lending, and they have to compete with the treasury rates. Whereas the Magnificent Seven don't. They can just get people with money to give them lots of money, and they don't have to compete. I mean, they kind of do compete, but they outcompete the treasury rates. So that's what your story of haves and have-nots. So ICE, more ridiculous pop. It's one of the exchanges. We're seeing CBOE rocking higher. Good time for the stock markets, I guess. And they keep raising the fees and junk too. I don't know if anybody knew that. In the background, fees keep going up. TSM rocking higher. Next upside 142, possibly 150. That prior high. Oh yeah, look at that. Look at that. Look where that exponential pop was. Right there. We may be gunning for that. Now, decliners, things that were going down. SPGI, look at that, coming right back down. That's S&P Global. Getting slammed on earnings. They didn't really miss that much. They just didn't beat. And must not have had a good outlook. ACLS. That was the downside target, and looks like we're working our way down. PA Paycom. That did a giant head and shoulders, and the downside target's right around 100. We push down, retrace back to the neckline. Do we go down? Maybe. ASML. That was declining, but it's been on a ridiculous run. Traded that one, got out down here. Don't even have FOMO. Like that's the key. When you can get to where you don't even have FOMO, you're just like, wow. Look at that baby go. That's when you're getting to have the right mindset for making money in the market. You can get your piece, be happy with it, and move on. TENX. It's like I was in NVIDIA at 150, got out at like 350, and I don't even care that I've missed the extra move up to 600. Like, I don't even, like, it's so ridiculous. I don't even miss it. It's one of the biggest reverse splits I've ever seen. Another biotech, pharma, medtech. Be careful. Chasing that stuff. DT. Looks like it's come back to the roadmap line after hitting the 1272. And for people that know Echo trades, you might do some work on that one. Looks like it's a little deep for an Echo, immediate Echo, and not deep enough for this Echo. Yeah, I don't know. PayPal. I've been talking about this this target down here at 42. Watch out below. May do it. It may do it. Target's down there at 42. Light. Right back down to the roadmap line. If it holds here, we can go up. Hit the downside target before, right in it, and reversed. Right back. That's a measured bounce, potentially. That could be a big upside potential right here. My trigger would be a move back up through 52. Potentially grab a piece of this going up to like this area up here, 70, 80. I mean, that's a pretty good move. You know, that's 50% gain. And you could do that on shares. And it'd probably go in a short time. Not bad. Not bad at all. Hershey, right back up to the roadmap line. Glancing off. Pre-market, it was dropping. Now it's popping. If we can get through, we can tip the turn the tide to up. This is a giant measured bounce. Giant measured bounce. Look at this. Has a lot of potential. A lot of upside potential on Hershey. So why do I watch the decliners? Because opportunity sometimes shows up for long-term trades. AZN. I'll keep an eye on Hershey. AZN looks like we may break on down. That one doesn't look like it's finding support yet. And that's a choppy hot mess. And it's biotech pharma. Medtech. COR has a lot of stuff going against it there. COR is probably hunting a top. And it may retrace. They don't just climb the fib ladder forever. There's only 1% of stuff will just go straight up to the 686. And then it's usually an epic crash. RPD. Looks like that one wants to go down some more. Golly, look at the volatility in that. Very choppy. That's very choppy. Datadog. Upside 141. Downside retrace back to this support zone right here around 120. PALL. Looks like that one's going down in a blaze of glory. Downside 77 and 70 or 67 below that for palladium. ETF. Yeah. contrast that with URA, which has upside potential. Uranium versus palladium. Not remembering the platinum ETF. Platinum futures. I don't see it. Oh, maybe that's it. That's a mining company, it looks like. That one's going in the toilet. Philip Morris. Potentially one of their big products getting banned. I guess that's not good for business. Maybe dropping. AXP. Upside target right up here, 215. SPG. PPLT. Gold is not. We already hit gold. GC. You got to go to the underlying. You can't just use the ETF charts. That's why I went to platinum. I was looking for the ETF just to see if it was getting murderized, but Simon Property Group, if we can break out through this guy right over here. And we didn't bounce back here. We went way on down. Now, building something maybe constructive, but this actually looks slightly corrective, if I'm honest about it. Stopping right at the 100%. So if we get below the roadmap line, this is probably going lower low than what we had right here. If we get above this line right up here, we're probably going up here. So downside bigger than the upside. IPG. Just consolidating at the roadmap line. Nothing. Not even anything to talk about. NVS. Novartis hunting back the roadmap line. BWA. Going down in a blaze of glory. That's right at, if it doesn't hold that, it's right at the limit. We could come down to 21. Right at the limit. Right there. All right. So S&P probably going to grind on higher. Upside targets on up here. Depends on if you have it on log scale or not. 5150, 5200, somewhere around there. I 5150. That's kind of my expectation. We go tag that, then the party might be over. So watch out. Watch out, watch out. This thing can reverse hard. And look at this. Look how ridiculous. Look at that. SMCI. What did they start selling all of a sudden? Nothing. Like they're just selling NVIDIA GPUs. Can it keep climbing? Can it go to 1100? Sure. If it gets to 1100, I would buy some $800 puts out as far as you can afford. You can probably make $500 on a $400. You probably make $400 a put. And that's not, I'm talking about $400 per share, so we're talking, 400 times 100. Gets to be $40,000 per contract you buy. If we get that high, buy some 800. It's probably coming back to 200. Anyway. NVDA up in the zone. 240 is my price that I think it may top out at. That was the ridiculous target up there. Man. Look, 1, 2, 3, 4, 5. And it's a blow off 5. I can see it. I can see it clear. If we get to that zone right there, it may be worth it to buy. I don't know what you could afford. It's probably going from this 700 area back to at least 350. Maybe at least 400, 350 to 400. Coming back in that zone. Right in here. More than likely. Could go deeper even. Might fill that gap. That gap right there. Just throwing it out there. I'm not saying it's not going higher. I'm just saying when the party's over, we're going to see some wicked retraces. I mean, people have been loading up on this thing, FOMOing. Like, fund managers have been FOMOing. It's never good. Retirement fund managers. I'm not talking about hedge fund. I'm talking about retirement fund managers have been FOMOing into this because they're scared of underperforming this epic rise. Yeah. Dangerous. Dangerous, dangerous, dangerous. And GLD is doing nothing. Probably going to go lower, just like GC. There you go. All right. Remember, if you're part of Discord, the things I say in Discord and then especially in the Termite Trading Lab VIP group are trump anything I say on the free videos here. So have a great day, everybody. And we'll be in Discord. So come hang out with me. The replay of the webinar I did yesterday for predictions up there, way up above. Let me copy it out of Discord one more time. It's in the announcements channel in Discord. And see if I can find, where did I put the, there's a reboot thing sticking up. And let me grab the link out of announcements. I have the link up in the chat above, but I'll throw it into the chat one more time. Remember, anything I said was beneficial. Give me a like. And I didn't put this in the description for whatever. I guess I didn't even think about it. But here you go. Here in the chat. Control V. Replay of the prediction webinar. Here you go right there. And have a great day, everybody.